And here we're going to be talking about the future of payment. I'll turn over to our host and our guests in just a moment. But what we are looking at is a world radically different from just even 6 months ago. You're looking at major chains like Marriott trying to figure out how to have a contactless reception experience and the changes that consumers are demanding based on their experience with coronavirus. Well, and please enjoy this great conversation on the future of payment. Thanks for joining us today.
Great, thanks, Walter, and hopefully everyone can hear me okay, and great to see you there as well. Can you hear me all right?
Yes.
Perfect, perfect. Good stuff. So maybe just a very quick intro from me. My name is Marc Entwistle. I work in Fintech strategy within Oliver Wyman's digital venture team, and I'm based right here out of Hong Kong. And as we mentioned, we've got, I think, what will shape up to be a pretty interesting panel today looking at the future of payments. Payments is really one of the subsectors of the fintech industry that has led the leading edge of change within the fintech space and really continues to do so. I think it doesn't really need much background, but Asia's really been the nexus of a lot of payments innovation. We only need to look next door at mainland China to have seen the rise of mobile payments there through the likes of WeChat Pay, Alipay, very much commonplace now, and increasingly across the region as well through their own international expansions and indeed kind of local in-market plays as well. Or fintech solutions which have been solving for much of the fragmentation that exists in Asia, whether that be fragmentation of currency, regulations, cultures, and so on. Or at the other end of things, maybe the kind of the real first use case of proper central bank digital currencies in China, and quite close to my heart, the explosion of virtual banking, both here in Hong Kong, but also, as we know, in Singapore, Malaysia, and hot off the press kind of now in Philippines as well, launching their own consultation. And payments is really something that cuts across all of these activities and is very much more of a cross-industry play than what we might think of other subsectors of financial services. So I think to that end, it's useful that we have quite a diverse panel with us today. I'm going to let our panel introduce themselves one by one. So maybe why don't we start with you, Jan? Let's go in order, or at least the order I can see you on the screen.
Okay. Hello guys, wherever you are, either here in Hong Kong or overseas. So my name is Jan. I'm Chief External Affairs Officer of Home Credit Group, responsible for business development, regulatory, GR, nonprofit. Home Credit Group is a lending platform. We operate 3 retail banks and 10 consumer finance companies in 10 countries, from United States, Central Europe, Russia, Kazakhstan, here in APAC, China, India, Indonesia, Philippines, Vietnam. We are O2O. We are strong believers in omnichannel. So in one hand, we have super apps, marketplace, payments, of course. On the other side, we have point of sales. With our partners, we operate 400,000 point of sales. And to our B2C clients, we have more than 120 million. And we offer them cash loans, point of sales loans, credit cards, of course, payment as well. And we have also B2B partners, 3 streamlines. First, payments. For example, in China, we have a strategic partnership with AI Bank, which is subsidiary of Baidu, or with Shanghai Bank. Second stream, e-commerce mammoths. For them, we are doing together product development, joint products, Tencent, WeBank, Tokopedia, Akulaku, Mint, etc. And the final one, manufacturers. So we are driving the consumption up. Samsung, Huawei, Lenovo, IKEA, Oppo, Vivo, etc. So that's us.
Awesome, great, thank you. Over to you, Maggie.
Hi, everyone. I'm Maggie Young. I'm actually heading the digital payments and innovations for the consumer business of DBS Hong Kong. I joined DBS for 1 year, and prior to DBS, I actually worked in another global bank for 15 years. I worked in a different market in Singapore, Hong Kong, and also China. In fact, I actually returned to Hong Kong from Shanghai. And I think payment means to me, before I went to China, payment is a lot of more trouble and a lot of inconvenience because I need to mark and schedule the payment. And it's kind of like I need to write a check to my property development agents. And I find that payment, I have a different view when I actually work in China. And payment means a lot more enabling, convenience, joyful, fully embedded into my lifestyle. So we can talk more about this later on.
Great, thank you. And Satya.
Great, thanks so much, Marc. I'm Satya. I head up growth for Southeast Asia and Hong Kong for Stripe. Currently based in Singapore. For those of you who aren't familiar with Stripe, we want to build the economic infrastructure for the internet. So we want to provide companies with the most powerful tools to do e-commerce. So we power payments for startups such as Grab, Klook, Carousel, GoGoVan, as well as global companies such as Amazon, Deliveroo, Booking.com, and also like enterprises such as Octopus and the Singapore government. And I think on that, payments, I think, means a number of different things to me, but I think working at Stripe, really learned that payments is a very complex field, but at Stripe, we want to really abstract away the complexity and make it very easy for our users to go online and accept payments.
Super, thank you. So maybe Satya, why don't we start with you? I think it's just good to think about some of the context of which we sit in today. Like this year is very much not a standard year by any sense. And so many of us, I think, regardless of where we're operating in the world, have found new ways of working, new ways of doing business, and a lot of that has kind of directly impacted the payment space. We've obviously had the likes of Wirecard and so on in the news as well recently, and so I wonder, through a lot of this kind of unusual times of working and disruption in the world now, what are some of the main implications that you see now for businesses?
Yeah, definitely. I think, as you mentioned, the past few months we've definitely seen unprecedented disruption in both our daily lives, but also just how we do business. And I think particularly what we're seeing is several years of e-commerce acceleration really being compressed into a matter of weeks. And so, just looking throughout the globe, for example, in Latin America, Visa reported that 13 million of their cardholders made their first ever online purchase in March. And so that's a whole new portion of the world entering the world of e-commerce, and that pattern is really going to play out in emerging markets all around the world. Another example is if you look at China, already has a very high growth online groceries market. They expect to grow the industry over 60% this year, and that's more than double what they did last year. So these are a couple of examples, and I think what this really illustrates is that we are in a new normal for commerce. And I think the major implication for businesses, even hearing from our users, is that we need to really start thinking more seriously about online payments infrastructure, particularly businesses that have been only brick and mortar. They need to really transform their businesses and make sure they're tapping into this acceleration. And I think what this means is businesses of all sizes, whether it's the startups or your enterprises, need to be really obsessing over the online transaction experience. And this will be the differentiator between, whether a consumer chooses you or a competitor. And so I think what we've seen is forward-thinking businesses really focus on three areas. firstly, I think making sure their checkouts and how they're collecting payments is really optimized. So things like real-time card validation, making sure, they support popular payment methods like WeChat Pay, Alipay, FPX, numeric keypads for mobile, and then also improving some of their processes for refunds, fraud prevention, etc. And then lastly, really optimizing their online acceptance rates. And this one is something that doesn't get enough attention, but we think really makes a difference to the bottom line. So a key kind of stat here is that we found that businesses recover over 41% of failed payments just through using automatic card account updaters, and smart retries that Stripe provides.
Great, super, thank you. And so maybe just to come back, so I touched on some of the fragmentation that we see across Asia, and that fragmentation is really very much multifaceted, right? So whether it's different regulatory frameworks, different payment preferences, cultural norms, and so on. So, I mean, Stripe is already very much global, but as a continually rapid growing business here, it's still very challenging to achieve scale in your home market, but also not necessarily realistic to create new products for every new market that you then enter, right? So how do different businesses consult with some of that?
Yeah, I mean, it definitely is something we think about a lot at Stripe. As you mentioned, we're present throughout the globe, but like we're also expanding through Asia, APAC, and then across the rest of the globe. So, if we take a step back, I think the concept of being a global business has really changed. So, we used to associate globalization with multinational corporations, but really the internet has transformed how we think about that. And so virtually any business can now reach customers anywhere through the internet. And so, examples in Singapore and Hong Kong, markets that we operate in, is 70% of online businesses are now selling internationally. So yes, they cater to the local markets, but predominantly they do sell internationally, and often within their first year. So, and I think here, like regulations and fragmentation, it can definitely be obstacles. And so I think how we see this playing out is I think just the industry moving towards a world in which standards are commoditized, and I mean in a good sense. So, what Stripe offers in the fintech, Stripe and others in the fintech space are spending a lot of time and energy on this. And then I think the second thing is just how do we platform some of these payment infrastructures and make them accessible to businesses large and small, so that, an example is a business that, wants to go overseas doesn't have to spend time trying to do complex integrations with local partners in each of these markets, so that they can, focus on their core offerings and delight customers. And so I think in all of this, governments and regulators have a big role to play in making sure the policies and standards they put in place allow for this global integration.
Yeah, super, thank you. It's a super interesting area, and I think it's fascinating to see that it would be interesting to know cause and effect of whether it's regulators becoming more hands-on and driving innovation, which is leading some of this, or whether it's really the fintechs pushing hard and regulators responding to keep up. But it definitely feels much more global, and a lot of that is kind of responding effectively to much of that fragmentation. Jan, I wonder, perhaps we can come over to you. So we mentioned credit as one of the various kind of subsectors of the payment space, and it would be great to get your insights on that. So just easy access to credit feels like another area which is expanded hugely across the region. Can you give us a feel of how much of that growth is specific to Asia, maybe versus the rest of the world? Do you see any differences there, or any major differences versus some of the more rapidly developing markets here and kind of existing developed markets on the world?
Sure, Marc. So Asia is definitely a driver. Technology is here, scalability is here, because when you would like to really give access to credit to the people on an inclusive base, you need to have a scalability to be able to drive NPL and defaults, so the riskiness of the portfolio. And big country are, easier to run this kind of game in. And also you have opportunity here in Asia. So if we think about inclusive finance as a way how to bring more people towards the financial services, 50% of unbanked population globally is here in the 7 countries of Asia. 60% of Filipinos don't have a formal deposit account. 70 people in Vietnam don't have a banking account. So there is a driver because there is great demand. I would say another area where there is like this, I would say beautiful spillover effect from Asia is definitely Africa, and then Latin America. So this is a one cluster. So people that are left behind by traditional players who are afraid of the riskiness, you don't have a brick and mortar, facilities of traditional players in every village. So fintech is coming there, or alternative players are coming there. So this is one cluster. Second cluster is developed markets. There, I believe the credit game is actually without credit. So all the concepts buy now, pay later. Klarna in Sweden, for example. So basically this kind of models, plenty of e-commerce players and also retail players in Europe, US are trying to drive the consumption demand with this concept, pay later. So this is what is happening there. Together with that, developed markets are definitely more and more also about user experience and the wallets, which is normal here in Asia, but this is going to be driver in Europe anyways.
So how much of that rise of lending is driven by the kind of the newer or non-traditional financial services, whether that's some of the super apps that we've seen out here, some of the international expansion of e-wallets that we touched on earlier, or how much of it is it just kind of changing consumer expectations and so on that's being fulfilled by the more traditional players? Because I believe you kind of cover both to some extent. Yeah. So,
and especially for it, we believe that the alternative players are the driver, and they are driving. If I would think about us as a home credit as a being on both sides of the river, definitely alternative part is pushing us more and more. So alternative players, they are able to create beautiful ecosystems as a green field. So their tech costs are logically lower because we all have quite a lot of IT legacy behind us, which is also complicating the culture, the innovation and stuff. So first, alternative players, I'm strong believer in their culture and ability to innovate. Secondly, and I already touched it, the ability to go to countryside. If you are a big Chinese bank or Singaporean bank, you are willing to give money people from Beijing, Shanghai, Guangzhou, or Jakarta, but to go to, I don't know, Inner Mongolia or to Sumatra or outside of Java. So it's complicated. It's different kind of model, different kind of underwriting. And now I see even our online competitors in China or India, so they are able to drive this underwriting game better with informal data. Because, in Asia, FICO score, not so much. National credit bureaus, not so much. So you need to, at the end, to build your underwriting game by yourselves. And again, alternative players are very good at it. But the third and most important for me is overall user experience. And this is where I come to your question at the beginning, what are the payments? So at the end, we are playing, as our group, we are playing B2C and B2B2C game. So at the end, it's about the final customer. Our customers, they don't want to have money. They want to have money to buy something with them, product or service. And so the credit and the payment, the ability to do it with good stickiness in good environment is the key, what is driving them. And the alternative players are able to create this overall ecosystem. So it's not only about payment or credit, but the whole super app super app ecosystem that we see not only, well-known Tencent and Ali in China or Tokopedia and Akulaku, but in all Asian countries, everybody is trying to drive this ecosystem. So underwriting, credit, and go buy the service directly in your super app. At the end, the future will be only about alternative players? Not so much, because they are pushing us to change as well. So at the end, banks are becoming tech companies, and tech companies are becoming bank, and virtual banking is here.
That's a great segue into Maggie. Who I think so. DBS, obviously, you guys have had the reputation of the region's digital bank in many senses. We're now seeing the rise of virtual banking both here in Hong Kong and in many markets around Asia now. So it would be interesting to get your perspectives on what impact that is having on kind of banking generally, but maybe to stick with that theme of customer expectations. Are we seeing, or perhaps you can give us some insights into both how DBS is changing and what reactions we can see from some of the incumbents as well?
Yes, thanks. And I think in Hong Kong, we have 8 virtual banks license issued by the Hong Kong MA. And so far, we have 1 virtual bank in operations. And whereas the others, either in the staff pilot.
Technically 2 now.
Yes.
With SR and ZA Bank. But yeah, early days.
Yes, still very early days. So far, we haven't seen any major impact on the cash outflow or the deposit outflow to them. However, I actually really appreciate, the way they simplify the banking process, and also the design of the customer experience, the UX UI design, the processes, and also the way they do the marketing is actually very groundbreaking. So I think I think we have been doing this. We thought we have been leading the market, but I think we still have a lot more things to learn. So I think 3 major points I always talk to and share with our management is we need to super customer obsessed. So I think traditionally we actually design the bank way, not the customer way. So a lot to improve the operations, not focus on the customer experience, always drive cost savings, not focus on the customer experience. But I think super focus on the customer experience and also obsess about the customer is a number 1 top priority for us. The second point I want to bring out is we need to reimagine the banking process. We are very always do some things is very incremental. Do the operations, automate the operations instead of redesign the whole process. I think because we're so burdened by the legacy, and then the way we do it is, this is our current process, we automate the process, instead of thinking, we imagine what should be the experience for the customer from the front end to the back end. The third point I want to bring out, I think we need to bear in mind is, in the traditional way, when we design the digital experience, we actually want to support the branch. So move the transactions from the branch, so to support and it becomes an alternative channels for the customer to use in order to save costs, in order to get more high value at the branch. But I think the way we need to switch, we need to think about the digital is our core and primary touch point, so that anything that offline is to support the digital capabilities. And that's the reasons why when we design, we think about how we do the digital experience to the customer. And then our focus is how the surrounding or the offline experience to support the online experiences instead of the vice versa. I think that is a major mind shift. And that is things that we have been working on. And I'm sure that we are on a very good progress at DBS. Yeah,
great. Branches is a fascinating topic at the moment, and maybe we'll come back to that later, but definitely interesting in the context of COVID-19, the kind of forced push to digital in many senses. It'll be interesting to see to what extent we bounce back and where the role of branches continues. Maybe so I just a kind of a follow-up question for you, Maggie. So merchant banking's been one of the subsectors for you guys that has been, or at least one of the areas where you've been traditionally leading in Hong Kong in particular. Can you give us a sense of how merchant acquiring is keeping up with the explosion of alternatives to card payments? So we mentioned, I think it was Satya mentioned the likes of FPS, kind of Apple Pay, WeChat Pay, etc. How does that change things for you?
Very interesting questions. And then before I go into the merchant banking, as a customer today, if I go to any checkout counters, we see so many options. We have a QR code, we have Alipay, we have WeChat, we have credit, we have debit, we have Apple Pay, all sort of options. So I think the way that we need to think that we need to cater these options to the customer. So I think traditionally we have a standardized POS to capture, to allow the, the credit card payment. I think the way going forward, we need to allow all these are possible in one, terminal, if it is on a physical payment. And then the merchant is actually looking for alternative lower interchange option. So, in Hong Kong, we have FPS, faster payment system. People can use the QR code to scan and pay through the debit card, the debit account. So these are all kind of options we need to help the merchants to help the merchants and then let them to see what is the best for the customer. So we need to allow all these help facilitate the merchants to take up different options. B, we also need to provide merchants a lot more data about what kind of customer using different kind of payment vehicle. And help them to analyze the transactions and help them, it's not only restricted to offline, but also online facilitation as well. And I think the number 3 is since the COVID, the merchants actually working with the bank beyond the merchant acquiring, they actually want to see, how we can have a more joint promotions together to drive your customer, to our site to do the online purchase, e-commerce, and then through the booking to do the offline purchase as well. So I think that is all things we need to facilitate and also provide value added to our merchants. I think nowadays the value added services is critical importance for us to build the relationship and deepen relationship with our merchant partners.
Interesting. Good. I think we have a little bit of time, although I can just see we've got 10 minutes left. We've just been posted. We have, so that two questions have come up in the open Q&A, and I don't know if others would like to submit more. I reckon we probably have time for about 2. So I'm going to pick one of these, and that gives for if anyone else would like to contribute another. So I'm going to go with the top one because data sharing is a pretty interesting topic. So I think feel free to chip in if you'd like something. So the question, as stated, is how important is data sharing and new forms of underwriting for payment innovation and uptake? And who should take the lead on this? Is it payment companies, so I guess private sector, individuals, so I guess that would be end customers, or kind of governments and regulators? Any takers?
Okay.
Yeah.
So data sharing here in Asia, everybody is doing it. Sometimes it's complicated to understand whether we are competitors or friends and allies, because with all the players, for example, for us, we can compete again, for the same customer, and in the same moment we are sharing the data, buying, selling, creating joint products. So data sharing game, among the B2B, it's like absolutely normal thing here. Also the B2C, of course, and it's the right thing. The consent is coming here. So regulators are prudently creating some data protection for the customers. There always need to be consent of the end customer when the data are shared, which I think is the right thing. So this is the first. And second half of the question, underwriting. So at the end, underwriting, for me, it's like it's private sector game. So it's our it's on us how much we would like to go deep. What is our eligibility, inclusiveness. So from this perspective, every player has different kind of game and expectations. But the government definitely should be there for very important thing that is creating a lot of stress and problems, and at the end also risk bubbles on the markets here in Asia. And this is over-indebtedness. Loan sharks are very normal in all Asian markets. peer-to-peer platforms, with super high interest rates, payday lenders. So at the end of the day, there should be some checks and balances from the governments, to whom we as lenders should underwrite to give a credit. A positive thing is that regulators are really, moving forward with this problem. In China, there used to be 7,000 peer-to-peers, currently 200, 300. Everybody needs to get her own big license. Lexin, Lufax, Ant Financial, everybody is bringing consumer finance licenses. And the other countries, we see it as well. Indonesia, India, everybody is thinking how to protect the end customer.
Super, thanks. I mean, data sharing for me is a fascinating concept. I mean, out of Europe, obviously, we've seen the likes of GDPR, open banking, and PSD2 more generally, where it's very much, I mean, the answer to that one would be very much government-led, I guess you could say. And we're seeing elements of that out here, but again, it kind of comes back to that concept of fragmentation and dealing with a smaller or a number of smaller markets. But it will be interesting to see for a lot of the virtual banks that are rising here, who are many of them are joint ventures between multiple different firms. Surely the advantage there is in leveraging their own customer bases and being able to kind of cross-sell between those. And payments, as we said earlier, is naturally cross-industry, right? And if you could leverage that data across multiple different industries, such as we're kind of starting to see the beginnings of in the likes of Australia, then that creates huge amounts of fintech opportunity again, right? So definitely a space to watch over the next few years. Let's tackle one more question. Oh, we've had questions from Levent specifically for you, Maggie. So why don't we go with this one? So customer base of big tech, so Google, Facebook, Alibaba, Tencent, etc., is above 1 billion compared to 10 to 15 million customers approximately of DBS. Do you think big tech will be able to use virtual bank licenses given to extend their services to their customer base? If so, what will be traditional players' response?
Okay, I think thanks for the questions. And in fact, Ant Financials and also Tencent actually got the license for Hong Kong, the virtual bank license. I do believe they have all these technical capabilities to actually get into the financial services market. So, and I think they have advantage in terms of technology, and also they have advantage in terms of the customer base. But I think the way that DBS, especially Hong Kong, position us as a well-focused consumer banking business. So we actually we launched our virtual banking, virtual wealth management services in November last year, and that offer our wealth customer to onboard the banking services, including the wealth account, within 15 minutes. And then we actually enhance our wealth proposition, digital propositions throughout through the mobile app. I think when I compare us with the traditional bank, we actually have advantage of digital. We have a physical presence, and also we have virtual presence. And based on my knowledge, since we launched the virtual wealth management for last 8 months, interestingly, very interestingly, even though people actually onboard end-to-end, that means they open an account end-to-end digitally, the last mile, they still want to go to the bank because we need to commit AUM like Hong Kong 1 million. So 50% of them still go to the bank. They want to see whether DBS is around. They want to shake hands with the RM, and also they want to deposit the check. Interesting. I thought because the interbank transfer is so convenient in Hong Kong. And we do see the people, even though they digitally on board, they still want to meet the RM, shake hands with them. Oh, that's a human being. And I want to have certain level of assurance with the human assist. So I think, and also we traditionally know as a bank, our business is to build relationship and also build a trust. So I think that physical element still, so far, still as our advantage. to the virtual bank. And I believe the people interaction, human interaction in some form, even though the COVID, I cannot touch the people, but I still want to see the people on the video conference, have a dialogue with them. So I think so far we see this as something that we need to strengthen. Digital experience we need to strengthen, and also we need to, at the same time, we need to build like digital capabilities more robust in order to compete with the virtual bank.
Yeah, super interesting. It'll be interesting to see how much of those kind of customer expectations are a question of transition or cultural transition, and how much of it is actually here to stay, and whether that hybrid model ultimately.
Yeah.
I'm just going to close out with a final question, which is, so what, and maybe we'll go with you first, Satya. So what's the biggest shift of the payments industry that you're most personally excited by?
I think one of the things I had alluded to is just the acceleration of online commerce, and that's a shorter term trend we're seeing. But I think to kind of extend that, like, that is a trend that we're seeing in the long term as well. And I mentioned this is the new normal. And so, you know, one of the stats that really stood out to me was that 6 out of 10 European consumers said that their online buying habits have changed significantly in the last 3 months. And so I think that's definitely here to stay. And so as we see this longer term shift, you know, Stripe's definitely excited by that. But how do businesses really adapt and make their business models more robust and really not just make the most of this, but also really really capture the customers that are saying that they've seen change in buying behavior. So I think it's really on a lot of our customers to really adapt and plan for the future.
Super, thanks. Over to you, Jan. What excited you?
Omnichannel, definitely. Because previously it was like big game, retail fighting e-tail and e-tail fighting retail, but now it's like blurred, which is great, you know. The mobile proximity payments with the QR codes, you know, virtual credit cards, you know, and the e-commerce players going offline players going online. I think this melting pot of offerings is really something that can really create a lot of value, not only for the end customers or for us as a lenders, but intermediaries as well, especially small merchants. So what we have seen on Taobao for many years, also in Indonesia, Tokopedia and others. So I think this is creating and opening quite a lot of value. So the omnichannel is really the number one thing for me.
Maggie.
Hey, I think I fascinated when I was in China. I actually need to go around without cash. It takes a bit of time for me to get used to it, and I'm so happy to use the phone to pay around, scan a QR code, and I don't need to carry the you know, all these small notes and cons, right? So I think that one is, as a consumer, I actually really appreciate. I do believe in the future, I don't need to carry the phone. Maybe I just blink my eyes and I can pay, and then all my record will be virtually in front of me. And if I want to check the balance, I think the payment is fascinating, and then usually is the first step for us to engage the customer and get them to sticky with it.
Yeah, no, I'd echo that. I think like the consumer payment side has definitely been a recurring theme over this conversation, and so just customer experience, the move to mobile, and particularly or just the multiple channels that we're operating through now, and whether that be brick and mortar or online, and finally just that spike that we've had through the likes of coronavirus and so on, which is moving people to digital, whether that be online payments, online purchases, and so on. And we had that stat from Europe. I'm sure that we must be looking at least that globally, right? So this is. And if anything, potentially accelerated in Asia, right? So definitely a space to watch. I think that we could talk about any of these topics at great length. But I think for now, I just thank you all, panelists. Thank you for your time. Great conversation, and we'll hand back over to Walter.
Great,
you.
Marc.
Thank you so much.
Thanks all.
Yes, I want to say thank you, Satya, Maggie, and Jan, and expert hosting, Marc. You've really covered a lot of the future of payments. Maggie, I'm with you. I moved after 3 years in mainland China back to Hong Kong, and I miss WeChat. I think it's I'm more in WeChat. So listen, that was a great panel on the future of payments, and we're going to now remain on the main stage.